You've probably seen them everywhere lately. AI trading bots. They're popping up all over the place, promising to automate your finances and maybe, just maybe, give you an edge. For a lot of people, this is their first step into the world of automated trading. So let's dive in and figure out what the deal is.
And this is really the million-dollar question, isn't it? I mean, we all know that our own emotions, fear when the market drops, greed when it's soaring, can totally mess with our decision-making. So the idea is, could a piece of code, a bot that just follows the rules, actually do a better job than we can?
And that really gets to the heart of what we're talking about today. On one side, you have this amazing promise of a perfectly disciplined trader that works 24/7. But on the other side, well, there's some very real risks and a bunch of complexity that comes with handing over the keys. So what's the real story?
Okay, let's start with the good stuff. What's the big appeal here? Why are so many people, from total beginners to folks who've been trading for years, so interested in these automated tools? It all comes down to what automation really offers. I love this quote because it hits on a really important point. The best automated systems aren't some kind of magical, super complex black box that you can't understand. Nope, they're actually all about coordination. Taking a potentially chaotic process and turning it into a structured, simple routine that just works. So for beginners, it really comes down to two big things: discipline and freedom. Think about it. A bot can watch the market all day, all night, which is something no person can do. It executes trades based on the rules you set, not on a gut feeling, and that enforces consistency. This frees you up from being glued to your screen watching charts all day, and it actually gives you a structured way to see if your strategy is working. All right, so we've covered the why. Now let's get into the what. What exactly is an AI trading bot, and what are the main flavors you're going to run into when you start looking around? At its core, it's pretty simple. Think of a trading bot as your own personal digital assistant. You give it a very specific job, watch the markets for these exact conditions, and when you see them, execute this specific strategy. Then it should give you the data so you can see what's working and what isn't. That's it.
Now, you'll mainly see bots operating in two big playgrounds: crypto and stocks. A crypto bot is kind of like a high-frequency trader that never sleeps, built for a 24/7 market with some seriously wild price swings. A stock bot, on the other hand, is more like a 9-to-5 professional. It works set market hours and is usually tuned for much steadier, more predictable movements. The one you choose really depends on the pace you're comfortable with.
Of course, a bot is just a tool. It's only as smart as the strategy you give it. And here are some of the most common playbooks. You've got dollar cost averaging, which is just about buying a set amount on a regular schedule. Grid trading tries to make money when the market is just moving sideways. Arbitrage is a game of speed, looking for tiny price differences on different exchanges. And trend following is exactly what it sounds like. It tries to ride a rising wave. You're the coach, and you have to pick the play. Okay, so you know what they are and what they do. Now let's get to maybe the most important part. How do you pick one that's safe, reliable, and actually a good fit for you? This is less about finding some magic formula and way more about just doing your homework. Seriously, before you even think about strategy, you've got to think about security. This is non-negotiable. First, check if the platform is actually regulated. Do they use basic modern security like two-factor authentication? And are they upfront about their fees and what real people are saying about them in reviews? If you can't get clear answers to these questions, just walk away. It's not worth the risk. Look, a good, trustworthy platform always puts you in the driver's seat. You should have total control over what the bot can and can't do. A huge feature to look for is a sandbox or a demo mode. This lets you test drive your bot with fake money to see how it acts in the real world. It's all about building trust in the system before you put real money on the line. All right, time for a little reality check. Automation is an incredibly powerful tool, no doubt about it. But it is not a magic bullet, and it comes with some pretty significant risks. Understanding these dangers is absolutely crucial before you let any bot trade with your money.
And hey, it's not just beginners who need to be careful. Don't just take my word for it. This report from KPMG makes it clear that even the big institutions know that AI models bring new, complex risks to the table. Because these things are so complex, managing that risk isn't just a good idea, it's an absolute necessity.
So let's be crystal clear about the giant red flags to watch out for. A real bot connects to your existing exchange account. It should never ask you to deposit money with them. It should also never need permission to withdraw your money, ever. And if anyone at all, promises you guaranteed profits, run. Real trading always involves risk. End of story.
Now, this is a trickier but super important risk. It's called the black box problem.
See, some platforms let you rent or copy pre-built bots. The issue is, you often have no idea what the actual logic is under the hood. So if the market suddenly changes, a strategy that was killing it yesterday could get completely wiped out today, and you'd have no idea why until it's way too late.
This right here points out a classic marketing trap. You'll see ads for bots with a 95% win rate, and it sounds amazing, right? But that number can be totally meaningless. Think about it. What if those 95 winning trades each make you $1, but that one losing trade loses you $100? You're still deep in the red. Profitability is what counts, not just the win rate.
Okay, we've gone over the promise, the tech, and the big risks, so let's wrap this up with a clear, actionable game plan. How can a beginner get started safely and actually build some confidence without betting the farm?
Here's your 5-step launch sequence. First, just pick your playground, stocks or crypto. Second, lock down your account with 2-factor authentication. Third, give the bot the keys, but, and this is critical, only the keys for trading, never for withdrawals. Fourth, define your rules, and keep it simple to start. And finally, number 5, the most important step, test, and test again in a demo mode until you know for sure that bot is doing exactly what you told it to do.
And here is one of the single most important rules in all of trading, whether it's automated or not. Never, ever risk more than 1 to 2% of your total trading capital on any single trade. That discipline is what keeps you in the game. It means that a few bad trades can't knock you out, and it gives you the runway you need to learn and get better.
So if there's one thing you take away from all this, let it be this. Getting into automated trading is a marathon, not a sprint. The absolute smartest way to do it is to start small. Test everything in a demo account first, and only think about scaling up once you have the hard data in front of you that proves your system actually works consistently.
And I just want to leave you with this final thought to chew on. We talk a lot about the AI, the code, the technology. But when you boil it all down, the bot is just a tool. It's an order taker that executes a list of instructions, which puts all the responsibility right back on us, the user. So maybe the biggest risk isn't the AI at all, but the quality of the strategy we're asking it to follow in the first place.
You've probably seen them everywhere lately. AI trading bots. They're popping up all over the place, promising to automate your finances and maybe, just maybe, give you an edge. For a lot of people, this is their first step into the world of automated trading. So let's dive in and figure out what the deal is.
And this is really the million-dollar question, isn't it? I mean, we all know that our own emotions, fear when the market drops, greed when it's soaring, can totally mess with our decision-making. So the idea is, could a piece of code, a bot that just follows the rules, actually do a better job than we can?
And that really gets to the heart of what we're talking about today. On one side, you have this amazing promise of a perfectly disciplined trader that works 24/7. But on the other side, well, there's some very real risks and a bunch of complexity that comes with handing over the keys. So what's the real story? Okay, let's start with the good stuff. What's the big appeal here? Why are so many people, from total beginners to folks who've been trading for years, so interested in these automated tools? It all comes down to what automation really offers.
I love this quote because it hits on a really important point. The best automated systems aren't some kind of magical, super complex black box that you can't understand. Nope, they're actually all about coordination.